Welcome my panelists to today's edition of Frontier Opening Bell, Thursday, the 22nd of October. Onyeka Ejima from Vetiver Capital Management. He's the head of industrial goods analysis sitting here in Lagos. Thank you, Onyeka. Good morning.
Good morning, boss. It's a pleasure to be here.
Thank you so much. We appreciate your time. Akintunde Sulaiman is also a research analyst with Greenwich Merchant Bank, also based in Lagos, Nigeria. Good morning, Akintunde.
Good morning, boss, and thank you for having me.
Thank you so much. And finally, the man with the rich written all over his backdrop, the Rich Frontiers Management, Ali Kansaju in Nairobi. Thank you, Ali. Good morning. Always the CEO and founder. Okay, so let's just hit the markets as we speak. Nigerian stock market took about 0.75% beating on Wednesday. Of course, Nigeria is making headlines for every wrong reasons globally as we speak. Over the last 48 hours, the Ivorian market was about 0.1% in the green territory. The South African market almost by a bit of a higher margin than the Nairobi Securities Exchange, 0.06%, but still below the 140 reading psychological level as it were. The Egyptian market was down 0.5%. So let's touch in with the East African market with this Nairobi Securities Exchange turnover 40% on the day after that public holiday on Tuesday. And Kenya is launching a new pension fund investment company. What is that all about? And the new Kisi Center for Currency Services. What exactly is the Kenya Central Bank trying to achieve? And Ethiopia is still counting the gains of its new currency introduction, commercial bank deposits up 6 times in the first quarter. And Rwanda is pursuing aggressively its new Kigali International Financial Center. And now Rwanda's Finance Limited, which is a part of that, has been okayed as a new member of the WAIFC. Ali, a tee off the show for us.
Yes, so let me first start with Kenya and a political development. We had the presentation of the BBI, which is this document that the president and the main opposition leader, Raila Odinga, have been sponsoring. And that was presented yesterday. It's seen, the contents were only disclosed yesterday. People are still passing through that document, but essentially it's talking of restructuring the political class. It's meant to be more inclusive. It's considering the appointment of a prime minister, it represents an important political development here in Kenya. The question is how popular it will be, but definitely the president and the main opposition leader are sponsoring that document. Here in Kenya, before I go to your headlines, the shilling hit a record low of about 109 this morning. The shilling is down about 7.5% year to date. It's outperforming many other African countries. The kwacha, of course, is probably the worst performing currency on the continent. But that's an interesting development. There's been a lot of debate about the shilling as to whether it's being managed. This was what the IMF accused the central bank of last year, which the central bank robustly rebutted. But that's worth keeping an eye on. NSE turnover up 40% might look a good thing, but this is turnover of just $2.5 million, considerably lower than the historical averages. And, the NSE, I'm sure, would like to see better numbers. Gates Foundation is a big player here in East Africa, of course, and they've been heavily involved in promoting the idea of a vaccine for COVID. And this is an important statement of support for Ilara Health. Kenya launched a new pension fund investment consortium. This is trying to encourage pension funds to invest more of their assets into specifically infrastructure projects. And there was a lot of fanfare around that launch yesterday, as you probably noticed on social media as well. CBK has unveiled a new Kisi Center to aid currency services. This is very much in line with the central bank seeking to exit its ivory tower and make its presence felt across all parts of the country. They partnered with ABSA for that launch yesterday, and I think that's a positive development. Rwanda Finance Limited, the financial center. Look, we've talked about Rwanda before, and it's quite fascinating in terms of execution. They're creating the financial architecture. Now they need throughput. They need more business. But in terms of the house that the government's building for the financial architecture, you can't quibble with it. But the next step really will be IPOs, more activity being put through what is a very 21st century operation. And finally, big story in Ethiopia. This was the demonetisation, the new currency that was introduced. And what has happened is precisely what they wanted to happen. You've seen a lot of money come from under the mattress into the banking system. And I think that's a positive step for the Ethiopian government and for the financial system. Of course, they're looking to do a lot of reforms. They want to divest some of the telecom. They want to encourage new entrants into the telecom sector. But for now, they are being quite defensive when it comes to the financial sector, where a lot of banks, both East African ones and international ones, would love to get a piece of the action, but so far haven't been able to make that breakthrough.
Thank you so much. Let me ask Akintunde Suleiman. I'm sure Nigeria and Central Bank can look for creative ways as well to get more money out of the mattress into the deposit or the vault of the banks. Do you think there are certain things we can harvest, we can do here at home?
Yeah, I mean, there are various ways that which we can seek funds, we can harvest funds. Securitization is a very important one, but we will see there's been a lot of or there's not been a lot of policy guidance onto securitization, greenfield or brownfield and the like. So that is a very lucrative way to raise capital and harvest funds and nest funds, and it's one of those ways we're looking at the Greenwich, and we'll see at exploring those opportunities to increase cash flows and funds liquidity to the system.
Interesting. I'll get to you, Onyeka Ijoma. Let's quickly bring in Nigeria's West African market. Of course, Nigeria's story is right there on the front page and on the social media all over the world. The protesters' killings, the violence that followed that. The stock market went down yesterday. Guinness released its Q1 numbers, a couple of few earnings, such as NCR Nigeria, 76 million profit, massively down from about 200 million, which was reported in the previous period. For third quarter, we haven't heard from the big banks yet. Perhaps that will start coming through from next week. American Group and the African Development, Global Development are acquiring Air Burkina Faso. I'm sure Ali is interested in what happens to countries like Burkina Faso having its own airline. But again, it could be business there for logistics, for agro products, whatever, from neighboring Mali, cotton, and all of that. And Bank of Africa, the one in Burkina Faso, says its net income was grew about 5.3% to about 14 billion CFA from. Ghana's debt to GDP is expected to reach 72.8% by the end of 2020, according to Fitch. But let's start from Nigeria. Akintunde, I want you to speak a bit later on the Ghana's debt to GDP. But let's start with Nigeria. Onyeka, do you think these protests and this violence is that kick at the back end that the Buhari's administration needs to do not just police reforms, but to do massive and quick socioeconomic reform?
Thanks for the question. It's very interesting that the administration needs a kick to drive these reforms. because it shouldn't have had to devolve to this point before we start, serious conversations, in the political sphere. At the moment, it doesn't even seem like negotiations are going to be on the table in the near term. It seems like everybody is, being very emotional after everything that happened on Tuesday night. The former president said, using the extreme violence such as this, just closes the door on negotiations for a while. Yes, the government should continue to look at, driving police reforms and all, but it really shouldn't have, gotten to this point. But it's always very important for them to do this. It's very important for the government to try to contain the situation as diplomatically as possible right now, because insecurity is never good for the economy. It is not good for the stock market. We saw a mild reaction yesterday, but if the situation continues this way, we might start to see even much stronger sell-offs, across the market. I believe that now is the time for the government to reach across the aisle as much as possible. We start negotiations. It will probably be a lot harder than before the events of Tuesday, but political will is just needed.
I agree with you. Negotiation would be much harder to make. The red line seems to have been crossed on Tuesday, and for now it's going to be a whole lot to walk back from that Tuesday. A deadly line drawn in the sand by security officials and all of that. So it's still a whole lot cleanup. It's messy right now. It's chaotic and it's messy, and that's not. It's not good to have it both chaotic and messy at the same time. But as you said, the government will have to find a way around it, because these are very difficult times, ab initio, for Nigeria economy, with all the pressure that the government faces. So I can today, a very quick one on Nigeria before we go to the Ghana's debt to GDP ratio outlook by Fitch. In terms of the level, some of the level of destruction, we're seeing some bank facilities being damaged, shopping malls being massively looted and run down. The cost of this will be transportation for Lagos State and all of that. The cost of this will come through seriously on the insurance sector.
Yes, it's a sad one, but we'll further see eating on the insurance sector that we agree with me has not been so flourishing in the country, and this will mean that a lot of those insurance companies will be seeing their bottom line shrinking further. It's not a good one. It's a sad state, but it's just reality, and it always speaks to our value of life. Economically, I think for the insurance sector, they would I hope that they had add some sort of reinsurance with say foreign insurance companies or other insurance companies that would kind of provide a cushion for them. If not, with the kind of destruction we witnessed yesterday, and we expect there to be further beaten into their earnings, and this might not be so good for shareholders.
Yes, this may not be good for shareholders. And just a quick one again, Onyeka, for industrial goods and commercial goods, we're just thinking that, okay, we got budget 2020, we're working on budget 2021. The numbers were just coming out a couple of days before the sad and unfortunate grim event of Tuesday, and hoping that industrial activities will come back on stream. Look at the cement and others. Now it all seems like they all just hit a brick wall, as it were.
There's going to be disruption, mass disruption, across the country, mass disruption of economic activities from the curfews that had to be imposed to contain the spread of violence, mass disruptions from general sense of insecurity across across the country. To be fair, I have been staying indoors for a few days now, as things have sort of deteriorated, and I'm very unlikely to leave the house, in the next couple of days, even post curfew, because I would like to watch and see what's happening, on the streets, and what's happening. There's that sense of, there's that general sense of insecurity in the sphere. So outside of the curfew, people are going to be a lot more cautious, and this is not good for economic activity in the industrial goods space. With the curfews, or I doubt that construction work is classified as an essential service at this time. So all that will have to be placed on hold for a bit. Then when you look at other forms of of industrial activity, manufacturing, and all of this will probably be placed on hold. Outside of that, the cost of security for many of these companies, many of these producers and distributors will probably have to be increased. And then even on the government side, you talked about the budget that has been sent to the National Assembly. I mean, a few days ago, we saw a statement from the Speaker of the House of Reps saying that they will not approve any budget that does not include adequate compensation for victims of police brutality in the country. And this is surely going to add a lot more recurrent expenditure to the government. And even as the insecurity piles up, that provision is going to continue to increase. So there's a question of where is that ceiling going to be? How do we incorporate this into the budget? How much does it eat into? And we know that whenever any new things are added to the budget, it's the loser is always capital expenditure, because the current expenditure is usually not forfeited for capital. And so how all this will impact capital expenditure is unlikely to be very positive.
So if you put in up what you call a special victims fund, the money would have to come somewhere. It all goes back again to capital expenditure. Like you said, debt will definitely come in here one way or the other. You have to source the money from whatever equalization fund, whatever fund it is, to put it together. We're dealing with the Northeast and all of that. We're not yet through with that. I'll give us just about 1 minute to talk into the Nigeria's situation with the aftermath of the expected aftermath, if you ask me, because I'm not sure you're going to go that massive sporadic shooting, Aleppo, Syria style of what will happen on Tuesday night, and you expect everybody to go home and sleep nicely, wake up the next day and just sitting over a cup of coffee.
Well, I think a lot will depend on how the president now handles the situation. I think President Obasanjo, interestingly, showed a lot of leadership, I thought, in the way he spoke, the way he characterized the situation. And I think I would have preferred to have heard those words from the president, frankly. And I think it will be important, the tone that he sets. He's got an opportunity now. You had that surge, you had that spike, and he's now really got an opportunity to take control. And I think that will be important. The concern really is that you're now, the concern will be for investors, essentially, both local and international. The concern will be, is this something that's going to bed down again and calm down? Or is this a new normal? And I think what has got to be achieved is to make sure this is not a new normal and address some of these issues which have come out in a serious and substantive way. I think if that can be done, then this will be seen as an opportunity. But if it isn't, and if the government takes a very hard line, the nature of this sort of thing is that it just ratchets higher and higher and higher, and becomes very difficult to bring lower. So let's keep an eye on the stock exchange. I think, that was a small correction in the scheme of things. It could get deeper, but obviously, your Lagos economy, where the main activity has been, is the size of Kenya's GDP. It is a huge piece of the Nigerian machine. And therefore, the longer it's out of action, the more difficult it's going to be for the economy to pick up speed and create the jobs that need to be created.
I agree with you, Ali. Again, if you look at the location of Lagos, for example, as a gateway to a very critical West Africa, very rich merchandise for whatever products you're talking about. And even for the northern part of the country, because I've been to Maiduguri, for example, the hotbed of the Boko Haram in the last few years, and I've seen the massive stores of goods being brought from Lagos all the way to Maiduguri and be repackaged and put on trucks and being driven across the border to Mali, Niger, to Chad, to Cameroon, all the way and beyond. So Lagos is that pipeline into Nigeria for whether petrol products or flip-flops or bathroom slippers, whatever you call it, anything, whatever you talk about. The little industrial production that we have in Nigeria, south, east, and middle belt, whatever, you need, Lagos is that gateway. So it's very important. Lagos is just the poster boy for Nigeria, by the way, but without just overstretching that. Suleiman, give us 1 minute on Ghana's debt to GDP outlook by Fitch.
So looking at it, I think there's a rising debt in the global market, essentially, because every nation today is trying to spend its way out of the impact of COVID. And the developing markets, being that they rely on the developed markets for exports, it's likely to see, we are likely to see an increase in debt across every economy, Nigeria included, and every other state. So Ghana, is not surprising that we are expecting that there'll be a 72.8% spike in debt to GDP rate. This we can associate with at least a reduction in exports in cocoa. Because the government needs to, we saw them earlier this year. They got about $1 billion, I think, from the international market in terms of Eurobond, and that has increased their spending. And because we are expecting debt to increase and we're expecting GDP to reduce because of reduction in production and provision of services due to impact of COVID. So we're expecting this to impact debt to a very large extent. We expect that there'll be a widening in the current the account deficits because of lower exports, and there's been an adjustment to the Ghana cedis as well, which has impacted their books. And this essentially is something we are seeing across the globe. 72%, I think it's on the high side, looking at the benchmark that has been given by IMF or World Bank. But the countries just have to spend their way out of COVID. Nigeria inclusive, we will look at our revenue and what we are paying, even in terms of debt service. The same thing with Ghana, the debt service is about 60-something% of revenue. The same thing with Nigeria, it's if not even a bit higher, because nations and countries currently are not having inflows in terms of receipts from exports and taxes, because businesses are not functioning as they should function. We are seeing reduction in taxes, and that automatically we bring down revenue, and we need to borrow more to spend our way out of COVID. I think it's a global crisis. It's not just a Ghana thing. We're seeing increase in debt across every market, every economy, and this might be a danger in the coming years or the coming quarter. Yes. I think it's something we should look out to, something we should look out for. We need to be cautious in the way we.
Okay, thank you. I can today speaking to Cocoa Bloomberg reporting this morning. There's so much excess cocoa in London right now that some of the beans are being shipped to New York. It's such a very situation. But I'm going to check with cocoa prices. But Bloomberg reporting this morning, cocoa so heavy at the London exchange, commodities exchange, they're shipping them to New York right now. I think because of the harvest that we've seen. I know Ali is waiting to dig his fingers into the debt story about Zambia, talking about the Ghana's debt to GDP ratio and what the latest S&P is all about. But let's just give everyone a quick sense of what the Southern African market is. Zimbabwe is in the news. It looks like the finance minister is so optimistic, including about the fact that Zimbabwe's economy will grow this year 7.4%. It's going to be an outlier of, I'm sure, perhaps even China itself, which is the dragon. Bank of Namibia's central bank kept repo rate unchanged yesterday, 3.7%. Mozambique MPC also kept rate unchanged. first round in South Africa secured $200 million for business lending. That's good news. South Africa needs it. Anglo-American South Africa's unit has been sued over lead poisoning at the Zambia mine. It looks like Zambia is coming off like that Wilson Tabo's book I read in the lower junior school titled 1 Week, 1 Trouble. I want you analysts to just write it down somewhere. You can Google that up. 1 Week, 1 Trouble. That was that book written, an African writer. This schoolboy gets into trouble every week in school. Is either he burns down the laboratory or the next one he's just getting into trouble every week. So it's called 1 Week, 1 Trouble.
That sounds a book I'd like to read. I think you were starting off with the Zambian story. This is S&P, I believe, which has pronounced that Zambia is in a default, notwithstanding the fact that Zambia has, I think, 30 days from the date that the coupon is due to make good that payment. But essentially, they've gone ahead of that and called it a default. Zambia's travails, Zambia's debt to GDP is over 100%. That's what we know about. The currency has been in free fall. President Lungu has been unable to sort out the IMF and the multilateral institutions. And really, you could say that Zambia is the canary in the African coal mine. This is what could happen if countries don't get their situations under control. And unfortunately, many of our countries went into this COVID economic downturn with their balance sheets fully loaded and fully borrowed. So that's been the other challenge. But we'll have to see how Zambia develops. Bonds are trading at, I think, 46 cents in the dollar on the Eurobond market. This big rally we've seen in the copper price has not been sufficient to alleviate the debt crisis in Lusaka, unfortunately. A couple of other stories you were mentioning: Zim economy to grow 7.4%. Professor Matuli Cube, he really has got his bullish hat on these days. That would be a tremendous result. Interestingly, the currency is also stabilized, admittedly at much lower levels. And I think what it's telling me is that, of course, Zimbabwe was always a very rich country. We knew that from the beginning. If as long as the rains are good, and I'm worried about the El Nino weather system, which is going to hit East Africa and the Horn of Africa very badly. So if that does not hit Zimbabwe and they get a reasonable harvest, I think then he'll pull this rabbit out of the hat. Because, you can keep going lower, but at some point you bounce, and those bounces can be quite good. And this is, I think, one example of that. First round securing $200 million for business lending. That's a good result, because I saw some data points saying that bank lending into Africa had reversed quite dramatically this year. So there still seems to be money for business lending, and I'm glad First Round have tapped into it.
Okay, well, I want us to spend just about 2 or 3 minutes left to round off the show. So let's quickly bring in the North African space, where the latest news around Attijariwafa Bank in Morocco. It has the safest bank on the continent, the best in Morocco, the best in investment banking, is making the headlines from the Global Finance magazine based in the US. And the Bank of Tunisia's net banking income up 2.4%, third quarter numbers. That's what the numbers are. Let's talk about the third quarter numbers a little bit. Guinness came in this morning, overnight, with these numbers. I'm sure we haven't seen, trying to read through the details. Oyeka Jema, give us your thought. Do you think what we saw from Guinness, of course, being its first quarter, by the way, because it's on a year end, is June, different from NCR, for example, so they're totally different. But again, if we use Guinness first quarter, July, August, September as a mirror of what the third quarter is for the Nigerian economy.
I don't know if you can use it as a mirror for the entire economy, but you can certainly use it. You can certainly use it as a proxy to test how the consumer goods sector has improved. And we talked about it when PZ released their results, because they also have a different, accounting period. We saw that they had, some significant improvements June and between June and August, and we expected that we would see that ricochet across the consumer goods space. And Guinness is just one of that. We saw that their top line grew. Their top line was up, year on year, and it was mostly due to domestic consumption, because their exports are still down. No surprises there. This is largely due to the closure of the land border. The closures of the land border, exports were still down, but domestic consumption was higher. We saw that on the cost profile. We saw a bit of a mix. Gross margins fell significantly, because we are still seeing pressures from FX. Driven induced inflationary pressures on their imports. However, their operating expenses had fallen, because they were able to curtail their distribution expenses and their administration expenses. This is something that we've sort of been seeing across the key producers, because they've been able to tap into the work from home initiatives to reduce their overhead administrative costs, and also because there isn't still a lot of business in the nightclubs and the bars and the lounges, due to people still maintaining certain social distancing measures. They haven't had to distribute as much to so many of these outlets, and so their distribution costs have been properly managed. I think it's very interesting to see that they've also been able to pay off a significant amount of their debt so far. As they're trying to leverage their business significantly, which is actually interesting, given that other companies in that space are trying to ramp up their borrowings to improve their cost of their weighted average cost of capital in the space. But so far, positive results from Guinness, even though they reported a loss. It was still impressive compared to the previous period in the last year. The only reason their loss increased relative to the last period was because they had a higher tax expense in this period. But generally, positive things. We expect to see even more positive results from the larger brewers, such as Nigerian breweries and international breweries. So we're looking forward to see their results.
It's going to be interesting to see those numbers. Ali, let's talk quickly about the banking space in North Africa. This bank in Morocco seems to be making waves.
Absolutely. They're very well capitalized, and this bank in particular has been very strong. So I think this is just telling us that the banking sector in Morocco, well capitalized, solid. They've done the occasional foray into sub-Saharan Africa, but nothing major as yet. It seemed to me there was a time when the king in particular was encouraging these banks to come south. But I think at some point they're going to do that in a meaningful way. Well capitalized, strong economy in Morocco, which is allowing them to grow. And I think that's what that recognition is. And of course, if you look at the GDP profile of Morocco, it's been reasonably stable. And in those environments, banks always tend to do well. But the banking industry is facing a very big disruption from fintech, whichever way you care to look at it, from west to east. And the question is, how are banks going to deal with that fintech upstart going forward?
Okay. Thank you. And finally, this morning, Akintunde Suleiman, 1 minute or 30 seconds. What's your outlook now on Nigerian banks? You're in the banking space.
Yeah, we're seeing a bit of revolution in the Nigerian banking space. Like Ali just mentioned, fintech. We going forward, we're going to be seeing a lot of banks imbibe and try to acquire some fintech companies and diversify, their portfolio. Currently, we are looking at a spread of non-interest income in the banking space. Although because of the low interest rate environment, we're expecting that interest rate interest income might decline a significant level, but not interest income. We're expecting it to keep driving their books and support them to profitability. Looking at it from the H1 perspective, we were surprised, and I think we are in for another surprise because these banks seem to have found their way around the low interest rate environment.
Thank you so much, Akintade Suleiman from Greenwich Merchant Bank. Thank you so much, Ali Kansacho. We appreciate your time this morning. A bit of an elongated discussion, but very interesting. Your analysis and your thoughts. Onyeka Ijoma from Vetiver Capital Management. Thank you, everyone. Do have a great day and goodbye for now.